Morning brief, U.S. stock market. We are producing the weekly update right now for the stock market. We're not going to get involved too much in the global markets. We are going to stay with the U.S. and we're giving you insight of what's going on from now into early next year and a brief comment on what's going on long term. And then, of course, we're also giving you details of what's going on into next week as well. So in this morning brief, I'll focus more on what's going on into next week. What we have is the model suggesting a level 4 interweek top should not occur until the start of the Sunday night session on into sometime Monday. And the key is whether a level 4 bottom shows up late today if they want to sell it, dip it a little bit, or shows up in the early overnight market ahead of that level 4. That would set up a scenario where the market can be down Monday and Tuesday, and that would also be a setup for looking for at least a level 3 top next week. If it doesn't work out that way, that's fine. It just simply means there ought to be some support, maybe some strength into Sunday night, Monday or something like that. We get a little setback, and then maybe we get another rebound later in the week. Sometime next week, we should get a level 3 top. Now, there's a very low probability, it's about 10% probability, the level 3 top can show up today. It's 90% probability it should not show up to anywhere from Sunday night all the way to the end of next week. Looks like it will be on the early side of the week. And remember, the level 3 is a trend, the largest up move and longest up move during a month, as well as a down move. It's how we do business in all free markets, liquid markets, okay? Or at least the markets I study, and I've looked at this for decades now. We get that kind of level 3 characteristic. It's how we do business, okay? And we want to put that to our advantage. So I think a setback's coming next week. Now, here's the key. Any level 3 from now to the end of the month, to even the start of December, and there should only be 2. Next week and about 2 weeks later maybe, any level 3 top will be eligible to trigger or coincide with the more important level 2 top. And the level 2 is the second most important trend during a year. It can last anywhere from a month to 3 months. It does relate to some important news, fundamentals, economics. It can be a sizable move up or down in the market. So we're looking for a top, and we think the market's going to decline by December, should decline from November into December, and then we're going to put a level 2 bottom in, and then the market should rally still higher into January, February, ideally. Okay, and that's because the long-term trend is up for a very long time, but we're also due for a larger level 1 trend. The first most important trend during a year can last 5 months at times. Where it's due to be up from that October low into January, February, some kind of setback, and they'll probably be higher by summer. Okay, so those are the zigzags of how supply and demand is hitting the market, and they does not have to always make sense with the fundamentals and economics, because there's another whole half of the demand story that just business just to do business, and it doesn't have to match the news and economics. And so it's important to know the rest of that demand, the rest of that story. So that's what we're looking for. Trend looks solid. We've had fantastic economic news. Federal Reserve told them what they wanted to hear. Okay, that we're going to start tapering, therefore must be we're safe and the economy is going to keep going for a very long time, and therefore the stock market, bull market should keep going. But yet they're not going to raise interest rates to maybe late next year, so it's going to take some time. So we've got some breathing room to run here. And the result is we've had a very good bull run. I think Goldman said it was the greatest amount of single-day short covering in the stock market in years or something like that, okay? However, at the same time, the model's saying, yes, this has been a nice bull run since that October low, but it's probably coming on an end anywhere from next week to towards Thanksgiving, okay? And I think we're going to err on the side of taking the signal next week, making the signal next week. And if we're wrong, we're early, we're just going to throw another dart near the end of November. All right, at any rate, as far as upside potential here, we want to watch 46.93. Maybe even as high as 47.08 going into next year week for the December S&P 500 futures. So use it as a proxy to the cash S&P 500, and you can use that as a general guideline of what's going on in the Dow Jones and NASDAQ. I'm a little suspicious the Dow Jones might start to the downside sooner than the rest because they're using that to hedge their S&P 500 positions and maybe NASDAQ positions. And the Russell 2000, even though we've had a nice breakout of some of these small cap stocks, and the rest of the stock market is finally on board when it had been fighting the S&P 500 for months now. That's a bullish sign of such a breakout. Makes me bullish well into next year. But even those stocks can set back into that December lull. And I noticed yesterday the Russell 2000 just seemed to be sluggish, like somebody was, selling, leaning into it. And I'm wondering, is that yet another hedge against the S&P 500? So are they already back being concerned this market could go down, but yet they're trying to be bullish. They're trying to stay with the overall uptrend here that's been going on for this week. At any rate, let's give the market a chance here. There's no sign of a top. Looks very strong, but there's a 10% probability it tops today, and it's down next week for at least a few days, and it may continue to work lower all the way into December. 90% probability the market pops some more next week, and then rolls over and starts down into December. And then, unfortunately, it may start down, change its mind, and move right on up into Thanksgiving before going down into December. And then what about the debt ceiling? There seems to be no news, like nobody's paying attention. I think that's great. That's wonderful. It's nothing but a nuisance to the stock market. We shouldn't be messing with it. At the same time, did it just go away? So, I'm thinking, I look on a calendar, I'm thinking, starting next week, maybe they start revisiting that. That's going to be the next thing for them to worry about. So in the video, I start out with the very short term, and I give you some levels to watch. Actually, I can give you a level now, at least on an intraday basis, trade below 46.67.5. Might not be a good sign here, but unfortunately for the moment, I'd have to wait till we get down into the low 4600s area, below 4660, to show signs of that level 3 top and a chance that we've also got a level 2 top and the market's coming down. So for the moment, it looks like the bulk of the traders that really make a difference, really run the stock market. They are bullish, but the model's warning some of them are going to reach a point where they want to take profits. They don't want to put more money into it, and we can get a setback. And it may be that they're also forecasting something to go wrong, or maybe we're going to get a news development that they don't particularly care for. Moment looking good, but I think we will be pulling a level 2 sell signal next week, and I'm scaling out a little bit, and I'm going to sell some next week. But the bulk of it, I want sizable positions long term still. This is still a long term bull market. In the weekly update, I discussed the oil market. I think maybe that's finally topped out. I discussed a little bit of Bitcoin, dollar, interest rates, and that's all I've got for you. Have a great day. Stay safe, stay healthy. Past results are not necessarily indicative of future results. Let's give the bulls a chance to run a bit more here. Thank you.